Good afternoon, everyone. Rob Lukey with Our Capital Group and ShopProp. I wanted to take a second to go over the Shiller Index, which most of you know is the most widely used index to track home prices in the United States, and then go over Our Capital Group and some of the things that we're looking to do there, as well as kind of an update, quick update from ShopProp. So home prices, what's going on? The data released today, which is through May 2014. Actually was below estimates, and we saw the 20-city composite increasing 9.3%. So remember what this particular chart is right here. This is showing us that home prices increase, what the increase is. In other words, right now it's at 9.3%. So that's how you read this particular chart. It hit a high earlier this year of but the 20-city composite hit a high of right around 13, and then obviously back in the peak we were seeing increases of 16, 20%, and this was year-over-year data. So last data that came out, I made an announcement in the Shiller, basically said we're seeing a little bit of a weakening. I anticipate this to still drop, maybe even come down into the 4.5 to 5% range. What does that mean? Things are probably going to continue to get a little bit slower as we approach. As a matter of fact, I think the next Shiller that comes out is going to show continued weakening in the year-over-year. Prices will continue to show increases, so they'll stay in this positive range. Remember, we were showing losses year-over-year during the decline, right? During the crash, the mortgage crash. And now we're going to get back into somewhere probably into this range. And I still think at some point, I'm going to show you a chart here in a second, that we're actually going to break through those peaks that we saw, the higher highs in the 20-city day composites. Obviously we saw some cities where we saw the year-over-year do very well. Still, markets that are staying the strongest are Las Vegas, San Francisco, Miami, San Diego, Los Angeles, Detroit, Atlanta, Tampa, and Portland. These are all continuing to see nice moves. San Francisco really strong. Moving on to where we are right now, one of the things I'll tell you that was interesting in the report is that we're continuing to see right here. It says the housing has been turning mixed economic numbers in the last few months. Prices of sales of existing homes have shown improvement, so existing home sales, while new construction and sales of new homes continue to lag. What that means is that, remember, new construction in new homes, remember, those particular properties are usually priced at the high end of the market. They're brand new, so they're generally trying to set a higher high or a higher price than existing homes. Showing that those are lagging means that there's not a lot of buyers for those homes right now. Maybe they're pricing them too high and so forth, and maybe that's why then you're going to see those come and compete with some of the existings. Again, it shows just a weakening market. I say the reason why I think you're going to see, and when I say a weakening market, remember we're still seeing 9% gains year over year. That's still strong. If we even come down to 4 to 5% year over year gains, that's still decent, and that's what I think we'll probably come to before we continue to start to see a move back up and another occur. So that's one of the things that's going on. But obviously, overall, the broader economy, especially employment, are showing larger improvements. This is why I think that even though home slices are starting to stall a little bit, this number out here, the newer, the broader economy, I think could push the market, if it stays strong, push it through the 2006, depending on what market you're into, the 2000 peaks. So going back, what I was going to show you, this is this chart right here. Now this actually shows the home prices, right? This is the 20-city composite in for medium homes on the 10 and 20, and this was the peak in 2007. Now the level of that 20-city day composite, remember what that means, is all that means is that all the 20 cities that are involved, that's the average, that's the median price, and this was the peak of all those cities put together. So we're seeing it. Right now we're seeing the market back to the summer levels, 2004 summer levels, right? And they're still off about 18% from their highs from this level up here, but they've rallied about 26% off their lows, which is down here. I do think that we're probably going to see this move, but I think you're probably going to see some type of slowdown to a drop, or at least some kind of stabilization first, before we see that. So we'll see a slight increase and maybe something that more looks like this over here, and then maybe another spike as you break through those. But that break may take 3 to 5 years. And again, I'm not a guru. These are just predictions based on what's going on in the overall market. So overall, everything's still looking decent in the market. The seasonally adjusted were bad. As you can see, this is the non-seasonally adjusted numbers showing up, but over the April change, those were all down in most cities, and 18 out of the 20 cities were over. So getting back to our capital group, we did make some buys. You can go to our site and you can always go to past performance and you can see what we're doing there. As you can see, we have quite a few properties right now. We're basically in properties and waiting for some stage. This property is done. We're waiting to get it sold. This property has a little bit of rehab to do, and we're looking to get it sold. This property just finished rehab 2 weeks ago. This particular property finishing rehab this week. This property, no rehab, just looking to sell it. This particular rehab has rehab to do. This property just finished this last weekend. So hopefully we'll get some buys in there. If you log on to your account, if you have an account with our capital group, you'll see something like this when you log on. You'll be able to see, obviously, what properties you're holding and what the potential profit is. You can then dig into them deeper. If you want to see different things that are going on with the property, you can go and view them, and you can see notes and so forth on it, what's happening with it, and you can go deeper into it. If you on your sell properties, you obviously can go ahead and go into your closed position. You can see all those closed positions, and you can see what happened with them, where they closed for, what their profit was, and so forth. So, and then obviously you can always search for available properties, or like most of our clients, they simply put in passive orders, where they click on this, and then they put in a passive order to invest, and then they become a partner in the next properties that OCG buys. On our capital group, we are going to be, on ShopProp, we are going to be launching a new site that hopefully will be better showing what we're looking to do, which is obviously we're interested in changing the way the world buys and sells, in particular the U.S. buys and sells real estate, by getting our clients the best price possible while sharing our commissions and bringing those transaction costs down. We're interested in being able to negotiate effectively for our clients and give them the best deal, as well as saving them all that commission that is currently in the majority of properties and frankly hurts consumers, in our opinion. Overall, like I said, everything else, if you have any questions, you can always go to our website, ourcapitalgroup.com, or ShopProp Realty. Thank you very much.